and on a weekly chart, and as you know, we were looking for, or working with this wave 4 structure to the downside. Wave 4s tend to be normally quite tricky. They're normally sideways and corrective in overlapping wave structures. So if we look at this wave 2 here, this is simple, so we can expect wave 4 to be complicated. We're a little bit like this one in here, actually. This one here was really quite simple here, and this one here was a bit more complex through here. So it is a little bit of a guessing game, and it only really becomes clear once it has matured somewhat. In talking about maturity, this particular move down through here has taken 40 odd days. I can't recall, maybe 43 or something, and this move down through here, if this is weekly here, but it's only moved down like 20 odd, 22 days, I think. So it's only moved down half the time. So it would be logical to assume that this is not complete here. And yes, well, let's just have a bit of a look at that. So I've been going off the situation that we do have the A wave down and the B wave and the C wave, and that's fine. This can also turn into a double zigzag as well, as we've mentioned in the charts as well, in terms of, let me just get this drawing tool out through here. Where are we? Yeah, so a double zigzag would be another move down through here. So that's what we're sort of looking at in this sense here. So we've got this first zigzag here of an ABC, and then we're looking at a second zigzag here. So it's a double zigzag before we move back up into this area through here, coming to the fourth wave of 1 lesser degree. So that's a real possibility that we're looking at through here. So yeah, so we just need to work out what this move up here is. And at the moment, this move up through here, if this move was 5 waves up here, then we would eventually see this move here, move further up through here. But we do need to see 5 waves up through here, and we just don't have those yet. So looking at, I'll just move into the next one here. I mean, it's great that it's on the 1600 here now, and it's retesting that there. This move up through here is quite close to the 61.8 retracement level here, so it's right on there really. So it's all sort of textbook stuff. However, this move up through here so far is just in a 3-wave structure. So that essentially would be this here in terms of, oops, here we go, up for 1 here and back for 2 here. And then we've got the next wave structure up, which would be the 1, the 2, the 3, the 4, and the 5 to here. So that would basically read as an A wave to here, a B wave to here, and a C wave to here. If this market moves down from here, down through here as a wave 4, it can move normally down to the 4th wave of 1 lesser degree, either to this point here or to this one here. But if it overlaps this wave structure here, the top of wave 1 here, especially on the cash market, then we know that we've got A, B, and C here, and not a 3, 4, and 5 up there. But if we do get that 5th wave going up through there, then after a 5-wave structure, then we would get a counter trend. So 5 waves would give us 1, 2, 3, 4, and 5, and then we would get an A and a B and a C, and then we would get the next 5 waves up through there. So at the moment, we're just in this little area through here, I guess. So we still need to wait to see actually what we get through this point here. And this is the same for, well, this is the S&P, got it already marked out here. And we were talking about this on Friday. I wonder where my count had gone, but there we go. So there's nothing we can really do about it. But what we do need to be mindful of, are the 2 possible directions. So, and we need to move, reasonably swiftly to do that. So on the cash market, you can look at this top here, and we don't want to see a move below that top there. Yeah, otherwise we're going to be making new lows through here. Same with the US markets as well. It's working with the 15,000 through here, the medium level. It's also moved back up to its close to its 61.8 retracement level up here. It's moved up in 3 waves through here, so it can certainly give us another 5 waves down here, lower through here to complete that double zigzag through there. There is another count that I've mentioned before as well, and this is using this move down through here as a wave 1 and a wave 2 back to here, and this all being a wave 3 down through here. And then this first move down here would be wave 1, this would be wave 2, and a wave 3 down through here as well. So that this move down through here being a leading diagonal triangle is certainly on the case as well. It's our sort of third alternative move, but I mentioned it right at the word go when this happened, and a few times through that, and it's time that we brought it back and had a bit of a look at it now. And the reason for that is because of this move down, this C wave got labelled here, is moved down very swiftly, and as I mentioned before, it's normally the A wave that moves down really swiftly, this one here, and the C wave is more normally lazier, more of a sort of 45-degree angle. In fact, the more angle that it is, the stronger it is in terms of going up, and that's why a sideways correction after markets moved up, gone sideways, they're strong, like a triangle picture, then they'll move to the upside quite swiftly. So but this is the opposite. This has got a bearish overtone here, so we really need to be mindful. I know we've got long trades in the market, and we would need to execute those and just reverse all of those trades from long to short, like very swiftly, like we did at the turn here as well. We were being short down through here with all our robo trades, and then turning them long here, taking more profit here, getting longs in at the same time and moving up here. So that's what we have to do again onto the short side here for all the the Australian, London, US robo trades. So once again, this move up through here being an ABC correction. So what we could say here is a move below the 14.8 here would give us that overlapping wave structures with these guys here. Okay, so that's what we're looking for there. I mean, it would be really good if it just stayed at the 4.9 through here, just sort of lingered around here and got back up and then moved up from there. Then we would have a 5-wave structure. But even if it's moved down through here, we can still get a move back up through here, failing there, then moving down and failing there and moving down. So look for those shorts on the 49 here. You can get it closer in here, but you'll just need to know what you're doing. Yeah, that's the same wave count there as well. And this moved through to this particular structure here, moved through to the UK markets and also the Australian markets as well. So we're just left in this particular space where we have to allow these things to move out. I know Friday's move here, the end of the financial year and so forth. So, lots of bit of extra volume, bit more selling. So we kind of need to soak up that somewhat as well. But another thing that makes me feel it's a bit bearish is the US bond market. So this is just a 2-hour chart here. And so if the bonds are going down, then the stocks market's going to go down as well. And what we were looking for here is we were looking at this being, we'd work through this correction through here. So we know this is 1 and back for 2 here. This is the third wave. This is a third wave down through here as such. And then obviously you can see here that we've got an A and a B and a C wave here. Okay, so, and it's moving back down, so it's corrective. So it's highly likely that we're going to see this move down, which in turn is, going to bring the share market down as well. So we know that the treasuries, the yields are being cranking to the upside. So there is that that interplay in the other markets that are suggesting further downside here. It's the same for the Europe as well. With the European market, the FTSE rather, and it does appear like there is 5 waves through here, but it can be counted. I've tried to pull it apart. It's just so messy. It's like the Australian market. The move up, at first glance, it appears to be bullish, and it certainly could be as well, but it can also be the corrective pattern as well. So I can't really say a lot about this, but what I can say, and a bit like our markets and the other markets, is that it's fine for the FTSE to move across the 62 here. Okay, so but if it moved down below the group 2 here, because when a market's correcting across a number, it really sort of gets locked in from group 1 and group 2 here. Sure, it can have a spike outside of that, but it's really going to diminish into the closest largest number. So if the market moves down and finds the 61.72 as resistance, then you know that it's in sort of trouble at that stage, and then you want to kind of get some short positions in, and also work the midpoint as well, the 61.50. But we need to allow it a little bit of time just to work through this somewhat here, and see what pans out through here, and eventually this will find support or resistance, and we can move in from that point. And like I said, that's the same for the Australian market as well. I can count it up for 5 waves here, but look, it's not a confident count of 5 waves to the upside. Okay, so I've pulled it apart. I can do it in many different ways. I've looked at the cash market, but the cash market has gapped in places moving up, so it's a little bit hard to count on that as well. So I really think that we just need to leave it alone in a sense, and allow the market to unfold across the 4,800 here. And if it eventually finds support, well, then we'll be going to the upside. Now, in terms of trading, group 1 up here is the resistance, group 2 here is the first support. Okay, so we can see that it's going to be the first support, and we can allow this to come down and test here and play around and so forth. If you wanted to short it, you just need to put the stop above this high here at 48, say 23, and then allow whatever comes in through here, and it could end up further down. But it is the midpoint here, the 50, that really would hold the most support here. So it would also a move, or the market finding the 47.50 as the retested resistance, would separate it from the 4,800 here and make it a much weaker market from that point there. What I've done is, I understand that CBA, or the banks, are leading it to the upside, and when we look at the banks here, I might just bring the daily chart up here. Okay, this is CBA on the daily chart, and we were looking for 5 waves to the downside through to here, and then we're looking for, after 5 waves, we get a counter trend, and that normally pulls back up 61.8%. So that would leave us anywhere between the 50 and the 60, which kind of where it is now, really. In this 50 and 60 sort of area through here. So we can look at our numbers here, and 70 is obviously the closest largest number through there. So that's what we sort of expect it to move to. There are some other relationships as well in this move going up here. Well, see, once this is complete here, then we'll be looking at another move to the downside. That's the same distance as that, if not more. And this move coming up through here, being an A wave to here, a B wave to here, and a C wave up there, would also be in 5 waves as well. Okay, so we're looking for 5 waves. Now, taking those 5 waves there and looking at it on the intraday chart here, and this is what we've got here. We've got the A wave here, the B wave here, and as you can see, I've tried to count, internally up through here. So I can see this is perhaps the top, at a guess, at the top of the 3rd wave, because I don't know if this wave 2 here should be over here as such, as an A wave and a B wave and a C wave to here. I think that fits okay. Then that counts from 5 waves up here in terms of the 1, the 2, then the 1, 2, 3, 4, 1, 2 here. Then you got 1, 2, 3, 4, 5, 4. I think that's it there anyway. But even if it wasn't, it would be moved to the 68 here, or just below the 38.2 retracement level, which would be from, we took it from here, which I think it is, put it there, then we'll be looking just a bit higher than that here. So we're looking at 68.35 sort of area, pretty much where that is. and then we'll be looking for one more move up through to here. So if you're long in these banks, then do some, I did mention on the daily robo system one to lock in some profits on the 70. Look, it didn't make it there, but if you've got long positions in on Friday, it's always good to lock in a bit extra on the Friday, especially if it's not a strong move. If it was a really strong move and we know where the US markets are and so forth, then by all means we could even add more. But in the unsurety that we've been in, it's good to lock a bit in, put it in your pocket anyway before the weekend. Right, so we're looking for 5 waves up. So this could be very much like the XJO market as well through here. So if we found the 68 as a retested resistance, then we know that we've got more of a bearish market on our hands at that point. So that would be a key point for reversing positions at that point. Alrighty, let's have a look at commodities. Okay, starting with copper. We know that it's bouncing along the 300. Sorry, I still haven't put the wave count in on here, but I know that this is corrective at this point here. The 305 here was resistance. It's making a bit of an effort at support here, but this is corrective, and yes, there may be another push up to here to go to the 4th wave of 1 lesser degree, but it's bearish, and there will be a move to the downside through here. And when we're looking at this particular wave count through here, we can see that if I just squash this up a little bit through here, we've got this as the bottom of, we've got wave 1 to, well, we've got wave 1 to, I'll just draw this out actually while we're here, because this is kind of important to the material sector. So we've got wave 1 to here, wave 2 to here, wave 3 to here, we're looking for wave 4 to here, we're looking for wave 5 to here. But in this tone here, all of this here is just wave 3, because this is wave 1 to here, wave 2 to here. So that would all be 3, then we'll see 4 to here, and then 5 down through to here further. So as I mentioned before, it's just, it's landed, it's going to bounce. We're looking for the first high in the bounce. Once we've got that, then it'll work lower from that point there. And of course, the BHPs of the world will be following that track. So any sort of short-term bounce in the, so we have a look at BHP in Australia here. We're looking at it being at trading level 3 as well. And there's going to be support down through here. So we know that this leg here hasn't finished, completed just yet. So we want to see, there will be a bounce off here as well. But I don't know, it's not worth, it's not developed enough to buy yet. That is a little switch trade set up on the long side there, but we don't have a stronger US market at that point there. The oil market is interesting. We've been looking at the rally here. We know that we had a little 5-wave structure within here, so that means that after an ABC we would get another 5 in here. We feel that 5 waves is in now, and we're looking at in this area up here for a top. What we need to see now is, of course, we need to see an impulse wave to the downside. We need to see a 5-wave structure to the downside to sort of confirm that. In terms of trading, we'd be looking for, once it's got its bounce there, we'd be looking for this to come back. 96.50 is always a good point to work with there, to look for short trades at that point there, and then we'll look further down from there. Of course, you can trade anywhere in a sequence. You just need to know where you are within that sequence. So any shorts here would really need to stop to be, look above the I don't know, 97.33 or something at least, and just look to add it. If you're not sure about the count, then look at the side here and look how much building in a trade. You need to work out, sort of when to add, and if you're not sure, you can just add it, start working it out mathematically from each price. So every 10 cents, every 20 cents, every 50 cents, and how much will that weigh on you where you'll stop, because as that moves down through to here, you can't move your stop down until you've got the retest there, unless you're going to take profit at that particular number. So you'd have to wait for this here to have a second high in to place the stop in. So that means that you need to, if you're building in trades through here, so to speak, then you have to calculate what that loss there would be to accommodate that. as such before this goes in through here. So you just need to work it all out mathematically beforehand. But it's not easy to build in a trade. Even once you know the Elliott wave structure, it's still difficult to build in the right amount at the right time. So yeah, so anyway, bit of thought there. The gold market is pretty much doing what we expected. We're looking for a bounce off the 1200 here, and that's underway there, as you can see. We're just looking for a sharp sort of low below the 1200 there the other day, down into the 72 area there, which has occurred. So now we're in the wave 4 bounce through here. I've left that this trend line in just through here because it's likely to, if it's going to retest, that's what it's going to retest there. But would be looking at the 38.2 retracement level, which would be from here down to here. So we can see it coming high as the 1260 the 1260 area in here. So just with that in mind here, we're looking at this area through here. It may just be as short as this little area here, but can move higher. Now, in moving higher, the levels come in handy. So the 1200 here, then we've got 10, 20 and 30. So if support is found on 30, this is going to be the first resistance area here, isn't it? And obviously this is going to be the second one here. If it finds support on this one, then expect this one to get this block here to be tested again as well from that point there. So, and in knowing those two blocks there, then you need to work with the levels coming up through here as well. So the levels are support on retested support on 1230. 30 is a positive thing, and that will get you to the 50. It can fail at the 50, normally pulls back to the 40 at least, and then moves up from that point there. So in the structure here, moving up here, you can see so far that on the 20-minute chart, the bounce off the 12 here is we've got 5 little waves here, that's fine, and then we've got our counter trend here, and then we've got our wave C up. So so far we've got, well, either 1 or A, 2 or B, and 3 and C here. So we can see that this here is, this is like a little 5-wave structure up through here that's not complete. So at this point here, we could say that, if I just bring that across here, just look at this. It's a little bit simple to be a 4th wave here, but it has pulled back up into the center here where the resistance is through here. But it can turn, these are the options it's got, and it's just a little bit early to say. So we could get a wave 4 coming back at a wave 5 up there. If we get this 5-wave structure here as such, 3, 4, 5, then you know that we're going to get a counter trend here, pulling back 50 or 60, and then we're going to get another 5 up through here, all right? That's what we'll get there. If we only get 3 up here, then we're looking at a flat correction. Yes, it is true that that could be the correction just there because it's in 3 waves and make new lows from that point. But it's more likely to be 3 waves up through here. We'd see 3 waves back here for the B wave, a bit deeper, and then the flat correction will give us 5 waves up through here as such, giving us a flat correction here, and then moving down from that point there. So the bottom line is that yes, we're expecting a low in, expecting a bounce, we're expecting a wave 4. Wave 4s can be complicated. I've just drawn out simple paths here. So first step is to find out, is this move going to be in 5 waves, or is it going to be in 3 waves and give us a flat correction from that point? If it gives us a flat correction, then we can look to short it from there. The other point too, if it does get 3 waves here, is a triangle as well, because wave 4s occur in triangles. So we'd be looking at a triangle through here, and this would be the A wave to here, the B wave to here, the C wave to here, the D wave to here, and the E wave to here, and then we drop down, okay? So that's the other option, that it can occur from that point there. Alrighty, let's have a look at FX. Okay, the euro here. We were tracking all this up through here in terms of the ABC and so forth, and looking for it to move back up to the fourth wave of one lesser degree. We were hoping that it would move up further from that point, but that's not the case. Be at the end of the financial year and all sorts of stories, whatever. But you can see that is well, that leg there is certainly complete there. It is true that it is a bit small, and we could end up getting a larger ABC correction in here as such, and having it like this here, an A wave and a B wave and a C wave through here. This move down through here can represent a B wave if you've got something complex, then something extra simple, then something more complex. So it is possible. So we need to be mindful of that, because it just wasn't a big enough correction for wave 2 here. Okay, but at that said as well, we were never really happy with the wave structure coming down as well, in terms of this wave 3 here being being a bear market should have been much longer as well. But we've just counted it, the best way we can, and this is the 1, 2, 3, 4, 5 here, and wave 2 here. We understood too that the euro has small retracement levels when it's in a bear market. So, taking a few, we just have to take the middle path and all the decisions and wave counts here. Now, the important thing is that this has moved down sharply through here and appears to be in 5 waves. Now, if that's the case, then after 5 waves becomes a corrective pattern, doesn't it? Some sort of little ABC, it could come back this high. It may be really shallow, like this one was shallow compared to the rest of it, and then just move straight down from there. So we need to be prepared and ready to short from that position there. And when we look at this particular structure that's sort of unfolding in here, we can see that we do have a 5-wave structure to the downside through here. So it is impulsive. So this here would be corrective and can be countered so far as a little A wave to here, which is in 3 waves. So those 3 waves there make the rest of it corrective. So that would be an A wave, a B wave, and you can see the 5 waves in here. So we can see 1, 2, the 3, the 4, and the 5 here. So that can be completed to that point there, and it can just work. It can work lower through here. So if that's the case, if that's the case of working down through here, you want to see some sort of retest here first. Then, look at that point there, put stops here or here in that particular case there. If this finds, some sort of move up through there, well, then that's fine too while it's above here. But if it moves below the 130, then you know what to do at that point there. The Australian market has already sort of fallen out of bed from its wave 4 there, so that was correct, and we're seeing it working lower. Look, bottom line is that you'd need to expect for it to have a a bounce back off the 91 before you see it down at the 90 here, which is the medium level through here as such. So in looking at that, this is the 15-minute chart here. So we're counting it right, so we had it right. So it was down for 1, back for 2 to here, even though it was high. And then looking at this just working lower through here, and this is the best count that we can come up with, and it works quite well in terms of the 1 little 5 waves down here. Back for wave 2 over this side is the A, the B, and the C. The 3, typical 4th wave sideways, 5th wave as wave 1 here. So we've got wave 1 here, wave 2. So we're in wave 3 coming down through here. But in wave 3 of this degree here, we've got 1, 2, 3, 4, 5, which is 1. And then we've got 2 in brackets. So we're still in this 3 in brackets is all the way down to here. And now we'll be in 4 to brackets, then 5 in brackets to make 3, then 4, and then 5 down through to here. Okay, so there's still a fair way to go. So drilling into this little area here, this wave 3 to this wave 4 here, it could be completed right in there, or it could pull back to the wave 4 of 1 lesser degree. So far in here, if we just drill in here, I think I've got that in here, is here. So it's just a 3-minute chart, but so there's a couple of ways to count all of this. So we're looking for the wave 4 bounce. Now the wave 4 bounce could be here already in that little guy there, yep, or it could be the alternative, it could be here as well. So I just I just don't know. It's just not sort of a range of things can happen through here. So if it finds support on the midpoint 50 here, then obviously it's going to go back up to 91.72 before it moves down further through here. If it doesn't get up there, well, then you can just short it and expect it to come down further into wave 5. I haven't got that there, but where are we? Wave 3. I've got wave 3 here. Well, yeah, the other side of this is we've got wave 3 here that could be completed there and move down, or the A, the B, and the C wave through to here. So when using these sort of levels here, this has been retested here as the resistance through here, but it was at the end of the session, so it's a bit meaningless in one regard because there's no follow through until to the start of the next session, but it is resistance, and it would see further downside from that point. The other point is that in group 1 here, the 10, 20 and 30, if the 2 here within the pivot of group 1 here, then once that becomes the retested resistance, then you can see it coming down further from that point there as well. So allow it to open, expect to bounce off the 30 if it does come down through here. If the 30 becomes resistance, you could probably get it in short from that point there as well. But it's just, we're in a series of wave 4s, and wave 4s can get a bit complicated and sideways and messy into triangles and all sorts of things. And this count here is just a little bit sort of tricky to see as such. So anyway, that's how it is. Otherwise, just stay short at this point here and keep the stops away. Alrighty, just to recap a little bit as well, in looking at CBA and the Australian market, the XJO and the US markets as well, there is a possible turning point. So when we put the robo trades out, we will probably be having very tight stop losses on the long trades that we have, and also trying to feed in some short trades as well. So there could be a changeover. We need to change as it's, we need to turn on the dot as well, and we need to take the next logical kind of steps. So we can kind of either expect in the short term, if we get it wrong, some short-term losses. If we get it right, then we'll move into more profit. But at the same time, the first thing we need to do is protect those profits. So we don't want to be a car caught in headlights. We need to make a move, and the move will be taking the next logical balanced step. So being balanced is not always the best, but the continuation of taking balanced steps will prevail at the end of the day. Alrighty, good morning, good luck, and enjoy the day ahead.